Good evening, ladies and gentlemen. I'm Rashmi from greytHR and today's host of this session. First and foremost, a warm welcome to one and all, and thank you for joining us today in this exclusive session of our Parichay webinar. So, as you know, our today's discussion is on the most awaited topic, income tax under the new Code of Wages, the challenges and the solutions. So, before we begin, let's do a little bit of housekeeping on how the session goes. So the first half of this session, we will have three presentations by our esteemed speakers. And we will start this session with Mr. Anurag Jain, and he will be speaking about definition of wages under labor codes, impact on components like PF, gratuity, leave encashment, and specific compulsory insurance requirement as per Chapter 5 Gratuity of the Code on Social Security 2020. And the next presentation will be by Ms. Aparna Surabhi on the taxation impact under the new wage code. And this will be followed by a presentation by our third speaker, Mr. Ramesh Padmanabhan on labor codes and uncertainties. Now, I'm sure you're curious to know then what will we do for the rest of the session. So it's your most favorite part, I can say, attendees, because in the second half of the session will be open for Q&A, where you can get all your queries related to the new code on wages answered by the experts in this session. So if you have any questions, please type them into the question box in your Zoom control panel. I'll bring them up during the Q&A round, try and get the answers from our experts. Also, if you're worried about missing out on any part of our today's session due to some unavoidable reasons, not to worry at all, because currently we are recording this session and the same recorded session will also be shared with all of you soon for your reference. Okay, so without further delay, let me welcome our esteemed speakers and introduce them to our audience. But before that, you might be wondering, like, Rashmi, what are we going to discuss in the first place? I'll soon talk about it, but let me first introduce our first esteemed speaker of the session, Ms. Aparna Surabhi. So Ms. Aparna Surabhi is a member of the Institute of Chartered Accountants of India and a graduate in law from Mumbai University. She is currently the Chief Finance Officer and Chief Human Resource Officer of Caliber Technologies Private Limited. And prior to this role, she was the founder of S. Aparna & Co., a chartered accountant firm where she was into practice for tremendous 28 years. So she has handled various kinds of audits in her practice and has been a consultant for various successful startups. She is also an independent director in 2 listed companies, and she was the first women member of the Hyderabad branch of the ICAI. So she has also contributed articles to the newsletter of the Hyderabad branch of the Institute of Chartered Accountants of India, the AP Tax Bar Association newsletter, and SIRC newsletter of the Southern India Regional Council of the Institute of Chartered Accountants of India and other professional magazines on topics of professional interest. So ma'am, it's an honor to have you here in our session and welcome. So I think, we just, yes ma'am. Yeah. All right. And
thanks, Rashmi. Yes, thanks for the introduction.
Yeah, glad to have you here, ma'am. And moving on to our next speaker, Mr. Ramesh Padmanabhan. So Mr. Ramesh Padmanabhan is a lawyer by profession and presently employed as a general manager handling HR legal compliances at TeamLease Service Limited, Bangalore. So he is an Air Force veteran and has huge experience of 25 plus years in HR and legal compliances. So he's heading the central operations and payroll functions currently for TeamLease CPO vertical. So sir, welcome to this session, and it's also a great pleasure to have you here.
Thank you, Ms. Rashmi. Thank you very much.
Yeah. So moving on to our next esteemed speaker, Mr. Anurag Jain. Anurag is one of the founding partners with more than 15 years of experience in working with Big Four firms. A chartered accountant by qualification, Anurag has advised larger and medium multinational clients on employee secondment arrangements, compensation structuring, equity incentive, designing, and time to time support to clients on tax and social security litigation matters. So, one of his recent experiences include advising companies on assessing the impact of new labor codes. So, sir, it's a great pleasure to have you. Welcome to this session.
Thanks, Rashmi, for a wonderful introduction. Thanks.
Yeah. So, dear participants, now let us start the session with Mr. Anurag Jain's presentation. Mr. Anurag Jain will be talking to us about the definition of the new code on wages and how does the labor law fall under that and further details. So, Anurag sir, over to you.
Thanks, Rashmi, and thanks to greytHR for organizing this session on labor codes. Let me just share my screen. So before we move on to the content of the definition of wages, as you might have already read and as you might already be aware, that the code on wages and the labor codes per se, the intention of these was to subsume the various labor codes. So the government has already enacted 4 labor codes. There is a code on wages, there's code on social security, there's code on industrial relations, and code on occupancy, safety, and health of the workers. So all these 4 codes have now been enacted, legislated. They have received presidential assent, and basically what is now left is basically in terms of government coming out with the effective date of notification. Now, initially the impression was that April 1st, 2021, the government will basically notify and put all these labor codes in effect. Because of the state legislations coming are still to be drafted, and because of the second wave and all those things, that has now been pushed back. Now the anticipation is that maybe in the coming fiscal year, they would put all this in place, or they might start basically enacting certain codes on a staggered basis. One of the foremost features of the labor codes was around the definition of wages. And as we are aware that all those central legislations had different definition, different interpretation of the term wages. And so the labor codes basically tries to uniform their definition of wages. And across all the labor codes, a single definition of wages would be applicable. And so it becomes important for everyone to understand what exactly does the definition mean, what is covered in the definition of wages, what is excluded, and what will be the likely impact of these new definition. So if the definition of wages, basically, if we look, just hang on. Yeah. So basically, the definition covers all the salary components which can be expressed in terms of money or capable of being so expressed, and basically includes basic pay, DNS allowance, and retaining allowance. So in short, every component or every sort of like remuneration which is paid by an organization forms part of the definition of wages. But at the same time, the legislation has also carved out certain specific exclusions. Those exclusions are components like statutory bonus, housing accommodation, which is provided by the employer, any contribution made by the employer organizations to pension provident fund, conveyance allowance, any sum which is paid to defray special expenses, house rent allowance, remuneration which is payable under any award or settlement, overtime allowance, commission payable, gratuity payable on termination, and last but not the least, retrenchment composition or other retirement benefit, which is paid by an organization on termination of employment. Now, with this exclusions coming into picture, the government has also inserted one important caveat around it, that whenever an organization is provided its components, they have tried to ring fence it by putting a limit of 50%. So all these excluded components can be provided by a company, but at the same time, they have to limit it to 50% of the total remuneration. The only exception is components like gratuity and retrenchment compensation, which will not basically attract this specified inclusion component. At the same time, one important change that has now been brought into the new definition is the value of the remuneration in kind, which is provided by company. And what is basically happens is that wherever an employee is given remuneration in kind, which is in lieu of either the whole or part of the wages payable to him, the value of such remuneration, as does not exceed 15% of total wages, shall be deemed to form part of the wages of such an employee. So now the question will come, and of course, my esteemed panelist, Mr. Ramesh, will also try to see that with this definition coming into picture, what is the clarity that is basically required from the government side, what the organizations will have to understand around this definition, and whenever they are carrying on this compensation structuring exercise, what is the sort of like basic tenets that one would need to keep in mind. In this slide, basically, we have covered a very small illustration on how the definition of wages would cover. So in a typical organization which provides components like basic, HRA, DNS allowance, medical, commission, or conveyance, the total CTC in this particular simulation works to around 40,000. Now, if we apply the definition of wages, there are certain specific exclusions coming around, which is the components like HRA, commission, conveyance. So that is coming to around 22,000. Now, going back to the definition of wages, wherein it was specifically highlighted that whatever exclusion you provide, you cannot exceed it to be 50% of the total remuneration. In this case, the total remuneration is coming to 40,000. So 50% of 40,000 comes to 20. So the amount of specific exclusion cannot exceed the limit of 20,000. So hence the delta amount, which is around 2,000, will be added back to the total remuneration. And that will form part of the wages for the purpose of the different contributions like PF, gratuity, leave encashment, and so on and so forth. Now, what could be the key impact of this new definition of wages? In terms of the gratuity, I would like to highlight gratuity component first, because based on whatever sort of like consultancy work we have done for the organizations, we are seeing that the gratuity is one single component that will be biggest factor and or which will be impacted by the new definition of wages. Now, the impact on gratuity can be one time, it can be recurring. If we talk about the one-time impact, let's suppose there is an employee which is leaving an organization post commencement of the code. The gratuity formula remains the same. It is a 15-day salary for every completed year of service. So in such a case, the change will be in terms of what is the salary for the purpose of gratuity. Under the present legislation, it is the basic salary which is last drawn by an employee. In this case, the basic salary will be replaced by this new definition of wages. Hence, with a wider definition of wages, the organization will have to pay an incremental amount of gratuity to their employees. In terms of recurring impact, I would say it all depends upon the organization structure. We have seen that some organization basically makes gratuity a part of the CTC. In such a case, with the increased gratuity impact of 4.81%, that will basically impact the employee concerned. Their take-home pay might get impacted. But in case of organizations who pay gratuity over and above the CTC, then in such a case, the organization will have to basically increase that outflow, and that outflow will obviously increase because of the wider definition of wage. Again, in terms of talking of components like leave encashment, now if we focus on a code on wages or code on social security, per se, they haven't covered a leave encashment component. The component leave encashment comes in the code of occupancy, safety, and health. And in that basically said that wherever the workers are being provided leaves and the leaves get accumulated more than 30 days, then they are entitled at the end of the year to ask the employer organization to pay them the leave encashment. In such a case, the leave encashment will be paid on the wages component. And again, because of the wider definition of wages, there will be an increased cash outflow for the organization to that extent. If we talk about Provident Fund, we are not seeing that much amount of impact. And I think the government is also of the thought process that primarily it will impact only those employees who are mandatorily covered under the PF legislation. There is a prescribed threshold limit of 15,000 under the current legislation. So what happens is that wherever an employee's wages falls below the 15,000 limit, they are mandatorily required to contribute towards the Provident Fund. But wherever the threshold limit is crossed, it is more than 15,000, then in such a case, the contribution is made on a voluntary basis. And the government's thought process is that for those category of people who are basically crossing the threshold limit, anyways, they are making a voluntary contribution. So for them, this particular new definition of wages should not impact them to a larger extent. Again, it all depends upon how the organization will like to structure the Provident Fund for these category of employees, whether they would like to contribute on the 12% of the new definition of wages, or whether they would like to contribute on an existing level, or maybe limited to the 12% of 15,000. Overtime is another important component which might get impacted. Right now, under the Code on Wages and as well as the existing legislation, there's a requirement that wherever an employee does an overtime service, then in such a case, the wages are to be paid at twice the rate of normal wages. So again, with the wider definition of wages, the overtime is another component that can be impacted. So I think over to you, Rashmi. That was all from my end.
Thank you so much, Anurag. I think these insights were really required for us at this point of time. Okay, so moving on to our next expert speaker, Ms. Aparna. So the next presentation will be by Ms. Aparna Surabhi, and ma'am will be talking to us about the taxation impact under the new wage code. All right. So Mr. Anurag, if you can, yeah, thank you so much.
Yeah.
Yes, ma'am, you can share your screen now.
Yeah, hope my screen is visible.
Yes, ma'am, it is.
Welcome to this session on the new wage code, the taxation impact. So I would like to cover this from two angles. One is from the organization angle and the other is from the employee angle. Of course, the taxation impact per se is not very high. I mean, it's a positive impact also in some cases. But we'll just like to cover it from the organization impact, because there are a lot of things which could impact the profitability of the company. And so what I've done is I've taken a scenario one where an organization is having a CTC model. So Anurag just explained that when there's a CTC model and the organization may even include the gratuity portion in a lot of cases, that's when everything gets fit into the CTC. So in this, what happens is a calculation for the basic and allowances is done backwards. So when it is done backwards, any impact because of this wage code will not have, there will be no impact on the total CTC, but there will be an impact of the calculations within the structure which is present. So what would happen in this case is, from the organization point of view, there's only restructuring of salary that may be needed, and that is within the concepts of the CTC. So if a restructuring is done based on what is this, if they follow the CTC concept and they do the restructuring within the CTC, then if from the organization point of view, there is no impact on the overall outflow on account of manpower cost at least. Of course, the gratuity aspect payment will impact the cash outflows. Also, what could affect is the extension of the coverage of overtime. And we all know that there is an anomaly in the law with regard to the overtime. There is no specific, this direction on to whom this overtime will apply. So it is possible that higher paid employees might seek to claim overtime. And this could have a huge impact on a lot of organizations. We know that in a lot of organizations, the time is extended during some peak seasons, example, even a chartered accountant firm for that matter. So during the peak filing season and all, there's a lot of overtime which is put in by the employees. And extension of the coverage of overtime might definitely affect the outflow of cash for any organization. What is good is there's no impact of any allowable expenditure on account of salaries, because all this will be allowable expenditure while claiming in the tax. So if the CTC model is followed and no additional amounts are paid, then there is no impact on the profits or the tax liability of the organization, at least to the extent of the salary component. However, these other components like the overtime and the gratuity payouts, which might become higher due to this definition of wages, would lead to higher cash outflows on account of gratuity and consequently lower outflows on account of cash tax, because all these will be allowable expenditure under the income tax act. So if we look at the tax as the tax impact alone of the wage code, there could be a positive impact, while there could be a negative impact because of the outflows, the cash outflows which will be impacted because of higher payouts of gratuity and the overtimes. Also, one important thing which organizations will have to do is, no, Anurag explained, it's a very complicated thing to first of all arrive at the basic salary itself. What is the 50% and how we should calculate the total compensation to arrive at this 50%. So this could lead to a lot of to compliance issues. And if we want to take care of our compliance in a very correct manner, then we would have to invest in some technology solutions. And to feed the logic into this technology solutions is also a great challenge for the technology companies, because though while reading itself, there's so many exclusions and inclusions and also it will be a challenge for anyone to be recalculating the basic based on all these components. So this is the organization one scenario where the organization is following a CTC model. So what happens to an employee of the organization in such a model? So in this model, the restructuring of salary will be compulsorily done in the sense that the CTC will be maintained and there will be restructuring of salary. The moment the restructuring of salary is done and we assume that there is voluntary contribution to PF, definitely the employee contribution to PF will increase. And because the employer contribution also increases, and this is also factored into the CTC, so there will be an impact on the take-home salary, which will become lesser because of the higher employee contribution as well as the employer contribution. So in this case also the impact on tax depends on whether the employee has opted for the new regime or the old regime. So if the employee has opted for the new regime, there is no impact on the tax except where gratuity is received, that is beyond the exempt limit. The reason is that all the deductions are not allowed in the new regime. So if they've opted for the old regime, however, because the deduction under 80C will be higher in the sense it's within the limit of 1,50,000. But if they have not invested in other other items which are eligible for deduction, then this PF would qualify for the deduction and they would not need to invest in any other to the extent the increase of PF is there. So this deduction will be eligible for if someone has opted for the old regime. What will also be impacted when we come to the taxation angle is because of this increase in basic wages, it will impact the HRA. So generally, we all know that HRA is given as a percentage of the basic, and it's not a fixed amount which is given in most cases. So this is given because of getting tax efficiency into the compensation structure. So because the income tax prescribes 40% for certain cities and places and 50% for the metros, the tax compensation is generally structured in such a way as to give maximum tax efficiency. I mean, that's what any company does. So because this is given as a percentage of the basic, the HRA component will have a difference here. And if this happens in the middle of the year, there could be a problem for the employee, because there is, when we apply for HRA exemption, then the calculation of the rent paid over 10% of basic will be lesser, because the basic amount itself would have been higher. Of course, what we presume here is that the basic as of now is not 50% already. If it's already 50%, then it may not lead to much of an impact. So if this HRA exemption gets reduced, so this could lead to a little higher tax to be paid because of the loss of this exemption. So this is the impact which could be there in case of scenario one. And of course, when gratuity, if there is a gratuity payout, naturally the income is there. So the tax portion also will increase. There's a higher income as well as a higher tax incidence on the income. So this is what can happen in a scenario one. So this is an illustration which I have given on how there could be an impact on employees. So let us say there is a CTC of 1 lakh per month. So this is a CTC per month. Out of which, say, let us say the existing structure provides for 30% as basic, and whereas the new will have to present as 50% of basic. So here the employer contribution of PF and all is calculated. So when we do this, the salary in hand as per the existing structure would be 92,800. But once the new structure comes into force, it would become 88,000. So the salary for tax purposes, so adding the PF contribution, the employee PF contribution will come to 96,400 in case of existing structure. Whereas in case of new structure, it will be 94,000 per month. So if you take the annualized salary, that would be 11.56 lakhs in existing and 11.28 lakhs if the new wage code comes into force. And considering standard deduction of 1,50,000, the 50,000 and that ATC deduction of 1,50,000, the salary would come to 9,56,000 in the existing structure and 9,28,000 in the new structure. So if you can see the tax liability here, it is in the existing, it is 1,03,780, and in the new, it would come to 98,100. So there would definitely be a tax saving. Of course, there is also the social security, which will be increased because of the PF, which is much higher in the new regime. So coming to the gratuity also, there will be a positive impact for the employee because 75,000 would be, I've just calculated it without taking into account the 15/26 for easy calculation. So gratuity payable after 5 years, assuming a constant salary, would be 75,000 in the existing structure, whereas it would be 1,25,000 in the new structure. So this way, there would be a positive impact for the employee under the new code. Let us take a scenario where the organization has a gross salary method where only the basic and allowances are calculated based on the gross, but all the other components are calculated over and above it. So if this is the impact on the organization, the employer contribution will increase because if the basic is less than 50% of the gross before the new wage code comes into force, then it will have to be increased to 50%. And because the employer contribution of PF is over and above the gross salary, this would lead to an increased outflow of employer contribution and hence lead to increased outflow on account of manpower costs. There would also be, of course, this is a constant for any method. There's an increased payout on account of gratuity. And so there is an overall increase in cash outflows for the organization. There will be a decrease in profits because of this higher expenditure, and consequently, as far as tax is concerned, there is a decrease in tax liability to the extent of that portion of the expenditure. Now, coming to employee impact. So this restructuring again will lead to lower take-home salary, but only this the impact would be to the extent of employee contribution to PF, which is higher, and the employer contribution is naturally above the gross salary, and hence that would go into the savings of the employer. So what is good is the overall CTC of the employee and the savings will increase. And if they're opting for the new regime, there is no impact on the tax liability as such, unless there is a gratuity component and the gratuity crosses the exempt limit. So there is no impact. But if they opt for old regime, because of this increased employee contribution, you can claim the ATC deduction, and of course within the 1,50,000, and hence the tax liability will come down in case of this scenario. So there are some things which we need to note here, that interest on PF contributions in excess of 2 lakhs in a financial year are taxable now. So if the PF contributions are in excess of 2.5 lakhs, like Anurag spoke of the voluntary contributions, this 2.5 lakhs, in the excess in over 2.5 lakhs will become taxable. Similarly, employer contribution, if it exceeds 7.5 lakhs, that too will become taxable. And gratuity, of course, if it exceeds 20 lakhs, if covered under Payment of Gratuity Act, or 10 lakhs, the excess amount, if it is not covered under Payment of Gratuity Act, the limit exemption is about 10 lakhs. The excess amount received would become taxable. So this is my take on the impact of the code on the taxation. Thanks, Rashmi.
Thank you, ma'am, for such a wonderful presentation. And moving on to our next presentation, it will be done by Mr. Ramesh Padmanabhan. Mr. Ramesh will be talking to us on labor codes and uncertainties involved around that. So over to you, sir.
Thank you very much.
Yes.
I'll share the screen. Hopefully it's visible now, right?
Yes,
Yes.
sir, it is visible.
Okay. So good evening, all. So today I'm going to discuss about the labor codes and the little bit uncertainties which is hovering around the labor codes, which is clarity is required from the government. So we will be discussing. There are so many around 18 plus, but I have picked up only four such uncertainties today. Let's go into the presentation. Let's talk about one by one. So the first thing is, when is the labor codes are going to be implemented? So as per the latest media news, we know the data is, it's 1st of October is what the media news says. But as per our internal, assumption, the labor codes are implementation of the labor codes are to be delayed to the to next year. So the main issue here is the fear of legal void. The government, the central government has received so many representation on this labor codes, especially on the wages definition, which Anurag and Madam they were talking about. There is certain clarity is required. There are certain allowances which is not notified. Even that ESIC, the threshold is not notified. So there is a fear of legal void. So that is one factor. The second factor, the central trade unions, they have demanded, complete withdrawal of this labor codes. They cited so many other reasons. The third, the major industrial states to notify draft rules. The major industrial states, what I want to mention is in terms of GDP, in terms of employability, in terms of employment. That's around 8 to 9 states around. So they have to notify the draft rules. So far, they have not notified the draft rules. And also there is a huge, fear around this third wave of COVID-19. All put together, the implementation is likely to be delayed, to the next year. Or maybe only the central sphere, the central labor codes and central rules may be implemented in the days to come, but not certainly from 1st of October. This is what our assumption and our conclusion. So second is, I was discussing about the states which have been notified, the draft rules. You can see the left-hand side of your screen. That's the 12 states, industrial states, where the GDP is on and the employability factor is more. There is only one state where the 4 draft rules have been notified. That is from UP. The major states like Maharashtra, Karnataka, Telangana, Andhra, Odisha, West Bengal, and Haryana, the draft rules are yet to be notified. So once, as we all know, once the draft rules are notified, it takes minimum 1 month or 45 minutes to get the suggestions and opinions. Then after it is notified through a gazette notification. So all said and then, it's going to be delayed. So this is a stage of labor codes as on today. That's number one. Number two, in the OSH and WC code, we have some uncertainty in the future of Shop and Establishment Act. Because as we all know, the Shop and Establishment Act is a state's subject act, and which regulates almost 70% of the industry. Only the factories, and if you take out a factory, around 75% of the industries and employees are regulated by state-specific shop and establishment. In this OSH and OSH code, the establishment, the definition of establishment means a place where any industry, trade, business, manufacturing, occupation is carried on, which 10 or more workers are employed. So wherever 10 or more employees are employed in an establishment or shops or commercial establishment, this will come under in this OSH code. In that case, what is going to happen to our future Shop and Establishment Act? As on today, the government fees is levied by the state-specific Shop and Establishment Acts, and the registration done in the state portals. They have already constructed their own portal wherein we can apply online and get the licenses or residence certificates. And what about the registers and returns, which is legally to be maintained by all the employers? And what about the less than 10 employees? If there is a shop, there is a commercial establishment which has less than 10 employees, what is their scope? Where they have to register? Now, in Maharashtra and Chhattisgarh, if you know, there is an intimation clause. If you have a 10 or less employees, then you have to intimate to the labor authority of your jurisdiction. So, but in this OSH code, this is a very this uncertainties right now. We need more clarity from the government concern, and only the draft rules of all those 12 states will tell us what is going to happen. But so far, it is not likely, and so far there is a huge clarity required on this. So again, the same OSH code. There is a clarity required for annual leave, whether this annual leave is granted to the employees or not. As per OSH code, you can see the definition. The employee means they cover entire workforce, whether it is workman or whether it is employee. But when it comes to worker, that is section 2 subsection ZZL, the worker means any person employed in an establishment doing manual all that's said. And then I'll come to the third subsection. It is which says who is employed mainly in a managerial or administrative capacity. It has been excluded. Who is employed in a supervisory capacity drawing wage exceeding 18,000 and above is excluded from the definition of worker. Now, from this, the employee and the worker supervisors are excluded from the worker definition. So let's see the next. So in a nutshell, we can say an employee can be a worker, but a worker cannot be an employee as per the definition provided in this code. Now coming to this annual leave with wages, the code says under section 32, every worker employed in an establishment shall be entitled for leave in a calendar year with wages subject to the following conditions, namely all those stuff. Now, how an employee is going to get his leave. There is a huge clarity required here. There is nowhere mentioned in this OSH code. So let's wait for the draft rules, whether they are going to mention anything in this draft rules or notifying in the draft rules or not. This is a huge uncertainty again in this OSH code. So next is your, as Anurag very clearly put up about the wage definition. So I'm not going back to that wage definition, but certainly I would like to talk about two such cases. There are a number of cases, two such cases where this problem, the anomaly is existing right now. Now let's say most of our companies pay incentive, most of our companies pay performance pay. Now performance pay, some senior people, leadership team, they get on an annual basis. Somebody, they get this performance pay on a quarterly basis, or some manager level and below, they're likely to get on a monthly basis. Now this performance pay, again, it's a variable one. This is purely on the performance. So some months it may, let's say an employee is getting a 3,000 rupees as a performance pay. In some month he might get 3,000, some month he might get 1,500, some month he might get even 1,000 rupees. In that way, how this incentive or performance pay is going to be included in part A, that is a inclusion part of wages, or it will be in part B, that exclusion part. In both the ways, either if it exceeds 50% and all the part B, it has to go, the excess, whatever the excess, it has to go to the part A. How it is going to be calculated? There is a clarity is not given in this. And second one is the commission payable. Again, the commission payable, if you look at mostly in the sales people, they get the sales incentives. Again, it depends upon the sales targets. Now, somebody may get less, somebody may get more. If in that case, what will happen? 1 month they may get the highest value, and it is included in the part A as a wages. So the next month is getting lesser then what will be his wages structuring? How you are going to structure the wages? Are you going to continue the same or are you going to reduce? So huge clarity required. it is not defined or clarified anywhere in the codes. So, and third thing, there is a very clear cut, there is a inclusion clause, there is an exclusion clause, and there is a conditional inclusion. Conditional inclusion, that's what that includes that 50%, and it goes to part A, part B, part A. And second one, they are very clearly defined what is the wages for equal remuneration. If equal remuneration part, if it is to be paid, what and all will constitute as a wages. That is very clear in the subject. But wages for ESSA contribution, which one you are going to take? Are you going to take part A? Are you going to take part B? Are you going to take all both put together on a gross or on a CTC? This is the clarity is missing in this code. So moving to so now this is another area where most of our most of our colleagues they misinterpret retaining allowances. What is retaining allowances? The wage definition includes retaining allowance, that is retaining allowance. But it is there, it is not defined in any of our labor codes. There is no definition for retaining allowances. So our people, they somebody calls it retention bonus, somebody calls it retaining bonus, but there is no clarity. But again, it is there in the clarity. The actual definition is it affects EPF contribution, it affects your bonus, and it affects. So now, where it has come this retaining bonus? So the retaining allowances, it is very clearly defined in EPF Act under Section 6. There is a provision 2. In that, it is very clearly mentioned an allowance payable for the time being to an employee of a factory or other establishment during any period in which the establishment is not working, and for retaining its services. This is what the actual and definition of retaining allowances. So where it is applied, this is applied in seasonal industries. Seasonal industries means now retaining allowances are paid for a period between 2 seasons where there is no work to retain the talent. So where and all it can apply? It can apply in a jute manufacturing. It can apply in crackers manufacturing unit where it's a seasonal work. 6 months you will have a work, another 6 months you will not have work. So to retain the talent, this is what the retaining allowances are all about. And it is very clear, and there is nowhere defined anywhere else. But we, as an organization or as an individual, all these days we have been misinterpreting the definition of retaining allowances. So the last uncertainty which I want to discuss is bonus threshold applicability. We all know the bonus is a central act and central legislation. So always the threshold is decided by the central authority. Let's say now the 21,000 rupees, whatever the bonus threshold is decided by the central act. Central act, it applies to across in Pan India, 28 states and 9 UTs. But the proposed changes is this particular power has been delegated to the appropriate governments. It means this particular bonus threshold declaring the power, it's been delegated to the state governments. Now, if it is delegated, each and every 28 states and 9 UTs, if they start declaring their own thresholds, then we will have a very, very tough time in declaring our bonus. All our employers will have a very, very tough time in declaring that bonus. So this is the the clarity which is required. These are all the couple of uncertainties which I have covered, but there are so many because of time constraints. I couldn't gather more, or I couldn't discuss more. Certainly, we will discuss this part in the next upcoming webinars in the future. So thank you for joining me right now, and we are open to your question and answers. Rashmi, over to you.
Thank you, sir. I think these pointers were really required for our attendees today. So thanks for sharing with us. And let me just share my screen. So dear participants, we are now open for Q&A. So if you have any doubts, please start putting across your questions in the Q&A of the Zoom control panel, and we would be happy to take it up now. I can already see there are questions pouring up here. So let's just take them up one by one. So I think one of our attendees, Mr. Deepa, has got a list of questions for all of us today, sir. Deepa would like to know if there is any clarity on the following components. So she has got a couple of pointers here for us to discuss on. So the first one is, so it's about employer contribution to ESI. So Deepa's question is whether these components form part of the exclusions and whether to be included in the 50% calculation, since it is not referred to in the code, unlike other components. So while employer's contribution to PF is specifically mentioned as an exclusion under the definition of wage, employer's contribution to ESI is not mentioned. So Aparna ma'am, would you like to answer Deepa's question here?
We should not give ideas to the lawmakers, so it is excluded.
I'll answer, Rashmi.
Yes, sir, please.
Yeah, see this. I've already discussed this ESI part in my PPT. So it is unclear. As PF is clear, but the ESIC is unclear as of now. So have to wait for the rules, draft rules, whether they are including anything in that. As of now, there is an answer.
It's
For
not
the
included in the
Rashmi,
exclusions or the exclusions. So
yeah. Now, further representation have already been made to the Ministry of Labor and Employment on this, because as Ramesh sir highlighted, components like variable pay, any one-time payments, because I'm seeing in the list which Deepa has shared in the Q&A box, certain components like one-time components like notice pay, even leave encashment is something that has not, any specific exclusion has not yet been carved out. So for all such components, and these are components which traditionally the industry and the organization have been paying to their employees. So if a components like ESI, employer contribution to ESI, or any premium which is paid by the company, if these are also included, this might lead to unnecessary hardship for the employer, as well as a take-home pay hit for the employees as well. So all those representation, I believe, have gone out from different trade forums as well.
Yeah. That's right. Yeah. Thank you, Anurag. And thank you, Ramesh sir and Aparna ma'am, for helping out Deepa on this. And next question is from one of our attendees, Mohammed Imran. So Imran's question is, what wages will be considered for calculation, especially the statutory bonus, ESI, PF, gratuity, etc. Ma'am, would you like to comment on this?
I think it was covered by Anurag. So yeah, Anurag, pass this question.
Yeah. So if I look at the question, it says wages, what wages will be considered for calculation? So my simple answer is anything which is being paid, and we have to look at the literal interpretation of what is the definition of wages. So as I was covering in the first basket, anything which is paid by an organization right now, as per that definition, is included, unless until there is a specific exclusion. And even for those specific exclusion, there is a conditional inclusion. So if I look at those specific components, statutory bonus, yes, there's a specific exclusion. It will be excluded, but again, subject to that conditional inclusion limit. ESI, as Ramesh sir told, that yes, there's an anomaly or a sort of like vagueness about it. One would have to see what is the intention of the government, whether they want to include it or exclude it. Provident fund is a specific exclusion. Gratuity is a specific exclusion.
Okay. Thank you, Anurag. And our next question is from one of our attendees, Ari Kali. So Ari Kali's question is for Ramesh sir. Sir, here the question is, first of all, the existing registration certificates under Shops and Commercial Establishment Act, which is to be surrendered, and new registration needs to be obtained under Code on Wages. So whether it's right or wrong.
That's what I was telling you. There is no clarity at all, because what is the future of Shop and Establishment Act? It's under question right now. Because as per establishment, the OSH code is going to regulate all factories and commercial shop and establishments. But it's still unclear. We'll have to wait, because UP government, they have released a OSH code draft rules, but there is no mentioning about shop and establishment. So it's still a misery, or it's still an uncertainty. We'll have to wait for some more time. Thank you, Ari.
Yeah, sure. Thank you, sir. And also, our next question is something related to leave from the same attendee. There are these paid leaves like EL, CL, SL, which are applicable to employees' date of joining or date of employment confirmation post completion of probationary. So I think here the intention of the question is to know whether this gets affected during our this new code on wages. So Ramesh, sir, would you like to comment anything on this since you already
Is it something, the question is something like the emoluments are to commence from the date of joining or date of confirmation?
Correct.
Right?
Yes.
No. See, the labor laws never proposes any probationary period. Labor laws say that the day you are employed, you are supposed to be the permanent employee. That's what the labor laws. But all our companies employers, they have their own policy, and in fact, if it is as on today, if it is anything below 24,000 rupees, then probably the particular employees can ask their HR to 24,000. Those who are drawing wages 24,000 below, then they can take up this matter with the HR department. Above them, they don't have any chance. They have to abide by the rules of company for time being. So ideally, it should be from the date of appointment, date of joining, not from the date of confirmation. Employee. I'm talking about employee.
Okay, sure. Thank you, sir. And next question is for Aparna ma'am. So ma'am, here our participant's question is under IT Act, whether employees are allowed to donate the lump sum to political parties. If yes, how much in CTC or is it unlimited?
Section 80 GGC, that is the deduction for donations to political parties. There is no limit on the donation provided it is not made in cash. So it has to be made by through a banking channel. And the limit, because it falls under the chapter 6 limits, it is limited to the overall amount. I mean, it cannot be more than the taxable income of the employee.
All right.
So to that extent, they can do it. So it's not related to the CTC.
Sure. Yeah. So I hope that answers the question. And next question is from one of our attendees, Mr. Kiran. So Kiran's question is it compulsory as per new code PF deduction of on basic 12%, or is it the ceiling limit 15,000 which can be done? So Mr. Anurag, would you like to take up this question?
So let me take up this question. We have been receiving these questions quite a lot from different organizations. One quick clarification for this forum is that if you look at the code on social security, they have built a transitionary clause in it. And it basically says that the existing, so we have three schemes under the Provident Fund legislation. We have a Provident Fund scheme, there's a pension scheme, then there is EDLI scheme. So what the code on social security basically says is there's all these three schemes will continue to remain for a period of 12 months from the date of the commencement of the code. So government is given a good time for the organizations to adopt to the new code on social security, while at the same time, all the schemes, the three schemes will continue as is for a period of 12 months from the date of commencement of code. Now, the question regarding that 15,000 limit and the 12%, as of now, it would remain the same unless until government comes out with a separate notification in this regard. Another question that I was seeing was around whether there's a mandatory requirement to contribute even if that threshold limit of 15,000 is breached. In such a case, once you start contributing towards Provident Fund scheme, you cannot ask the Provident Fund office to or request them for a withdrawal of that unless until you fulfill the conditions which are applicable for withdrawal. One of those conditions like attaining the age of 58 years or retirement age, then you can apply to the Provident Fund office for the withdrawal. And that is the only case. And there are like other sort of like examples around it as well. But today down the line, if the organizations want to limit the contribution to 15,000 for those people who are obviously earning more than that, then in such a case, the two most important things that they're required to do is first of all, take the employee consent, and secondly, approach the PF office, tell them about their intention, submit some sort of like application to them, and make them understand that for these section of employees, the 15,000 limit is being applicable, and so the extra contribution will not be done on a going forward basis.
Yeah, sure. Thank you, Mr. Anurag. So I hope that answers the question. And Mr. Ramesh, there's one general question from our attendees, since you already touched upon the leave part of it. So the simple question is it mandatory to have leave encashment policy in the organization? In fact, many of our attendees have asked the question around this.
Absolutely. The reason behind is why it is provided in the labor laws. The employer can exploit an employee by not granting him leave. Okay, so this is an earned leave. The earned leave means for every 20 days you work, 1 day is credited to in your account. This is called earned leave, right? This is not sick leave or cash leave, earned leave. So the earned leave is you have already earned it, and you can avail this leave at any point of time during your period of the tenure of your employment. Now, let's say if employer is not granting him leave, now in a year, let's say I talk about Karnataka. Karnataka, you have at 18 days of earned leave in a year. It is your eligibility. Now, at the end of the year, let's say now in the month of December, the employee applies for a long leave. Let's say 7-8 days, only 7-8 days. The employer refuses it. What will happen? That's not going. That your earned leave should not go waste, right? So that is why the government they have categorized it as a, you can carry forward those leave to the next year. Whatever the unavailed leave, let's say you are 18 days, you availed 6 days, balance 12 days you are not availed. Those 12 days can be carried forward to the next year, so that next year you can avail those days. Now, as per the existing labor laws, what it says, it cannot be encashed unless your separation is happening. Like separation can be resignation, your retirement, or death, or separation. But the new code, what it subscribes is every year, if you have any unavailed earned leave, that can be encashed the very next month. So the basic funda is this is what, because the leave is, you are earning that leave after working 20 days, you are earning that leave. So you are entitled either at the leave or in lieu as a encashment wages. So this is what is Rashmi.
All right. Thank you so much, sir. And ma'am, the next question is for you. So it is from one of our attendees. So the question is, are these codes applicable only to manufacturing sector, that is factories, or to all the industries? Regarding the working days suggested for 4 days a week and 12 hours a day, is it applicable only for manufacturing units?
Code is applicable to all industries.
All industries. All across. It's
across all industries, so there is no differentiation made.
Sure. Yeah. Thank you so much, ma'am. I hope that answers the question. And Mr. Anurag, next question is here for you. So it is from one of our attendees, Ms. Jayashree. So Jayashree's question is, their company is private limited company, and currently their basic is 45%. Okay, so if we have to make this or change this into 50% or not, one question. And also, from which month do we have to make these changes?
So I'll answer the second question first, from which month should such changes be made? I would say all these discussions will happen only once the government notifies the effective date of implementation. So right now, there's a requirement per se for the organizations to comply with the new code requirements. Obviously, the organization or the government from their side are notifying certain sections. We saw a couple of sections which they have notified from their side, and that basically focuses on the central advisory board for the purpose of fixing the national floor wages and so on and so forth. Regarding the first question, the company is a private limited company, and currently basic is 45%, and now they would like to change the basic to 50%. My suggestion to it would be, and this is one of the most common statement which is passed, is that with this new definition, let's just fix the basic at 50%. Please don't do that. Get a proper impact assessment done, because even if you put the basic at 50%, many companies pay the special allowance. Now, special allowance is not an excluded component, as we were discussing around the definition of wages. So if the company fixes the basic salary at 50% and then also pays the special allowance, chances are that the company would end up paying wages, and the wages will come to around 70 to 80% of the total CTC. In which case, there will be a greater amount of retirement contribution or all those benefits which will be paid by the organization. So there's a proper sort of like structuring which is required depending upon the facts of the case of the each organization.
Yeah, sure. Thank you, Mr. Anurag. And there's next question from one of our attendees, Shashi Kumar. So the question is, how do we check the take-home difference in the two regimes? Is there a tool where we can enter the salary components and proposed investments to check?
So I'm not aware about any tool unless Ramesh sir and Bam would like to comment anything on it.
Yeah. If ma'am is here, I think ma'am has lost the connection.
She must be joining back.
Yeah. All right. Okay. So in the meantime, we'll just, Sir Ramesh, sir, would you like to comment anything on this?
I missed that question, Rashmi. Can you?
Okay, I'll read it out. So how do we check the take-home difference in the two regimes? Is there a tool where we can enter the salary components and proposed investments to check? I think this question came up because ma'am has already touched upon the regimes part while discussing the new code on wages. Yeah. Okay, so I'll Shashi Kumar will soon come back to you. All right. And there's next question from one of our attendees. It's about overtime payment. So currently we are paying overtime on gross salary as per the Act. So after new code, if we start paying on as per new wage definition, will it have any impact? As such, will it reduce?
Yeah, it can reduce, because if they are paying it on gross salary, then the new definition, if you apply the new definition of wages, chances are that it can be a reduced amount. Because what is happening is we are seeing this in the case of a maternity benefit. So wherever organizations are providing the maternity benefit, the current definition of wages as per the maternity benefit legislation is much more wider as compared to what has been formulated in the new definition of wages. So in such a case, the chances are that the maternity benefit can get reduced. But of course, the organization who are already providing a higher benefit, they would not like to basically reduce such sort of like benefits provided to women employees. Coming back to that question around the tool, I think there was some mention around that the income tax website already provides some sort of like calculation, but that is more focusing on the old regime versus new regime. Right now, to the best of my knowledge, there is no website or tool which is there which basically allows an organization to view that what will be the sort of like monetary impact on account of the new definition of wages.
Yeah. Yes, you're absolutely right, Anurag. And also, I'm just adding on to that, Mr. Shashi Kumar. In fact, greytHR also has that provision for you. So all you need to do there is just enter your salary components of your employees, and you'll get to see the comparison immediately there. Like how is it getting affected in the new regime and how is it in the old tax regime. In fact, the component wise, you'll get to see that. All right. So just give it a try once. I'm sure you'll not be disappointed. Okay, so moving on to the next question, it is from Kashi Vishwanathan. So the question is around leave encashment. So Mr. Ramesh sir, I think you can comment on this. So the question is leave encashment as per new wage code as explanation given by Mr. Ramesh. If the leave has been encashed each year from employer perspective, the actual valuation of leave encashment under AS 15 will not be existing. So is that true?
No, I didn't. The last words, can you repeat the last words?
So if the leave has been encashed every year, from employer perspective, the actual valuation of leave encashment under AS 15 will not be existing.
True. True. See, if it is disbursed on a yearly basis, if the employer has got a legal eligibility to claim that encashment. So if it is so, then yes, employer that will be not be existing anymore.
If I could just take this.
Sure, ma'am.
See, AS15 is to roll first do an actuarial valuation of any future employer payouts for past service. So since it is already covered and it is being paid on an annual basis, there is no question of payments for a past service. There's no cost of past service as far as the leave encashment is concerned. And hence there is no need for any actuarial valuation under AS15.
All right. Yeah, thank you, ma'am. So I hope that provides the much clarity which was needed. So next question, it is from Kiran. So Kiran's question is around the basic pay and the PF deduction. So the question goes this way. If an employee is drawing a salary of 50K, 50,000 as monthly gross with basic of 25,000, but we are restricting his PF to 1,800. So will authority force us to pay it on 25,000? So this question is open, so any of you can comment on this.
So no, so if the person is, as I was mentioning earlier, if the person is already earning a salary of more than 15,000, then in such a case, the organization, it all depends on the organization policy, that they can restrict the PF contribution to 15,000 limit only. So I think that should answer the question.
Yes. Okay. Ma'am, would you like to add something here?
Yeah, as of now, the restriction of 15,000 and for no mandatory contribution and for ESI 21,000, there's no mention of it in the act. So there's no change at least proposed. So yeah, restricted to 1,800.
All right. Okay. So Ramesh sir, next question is for you. Is there any stipulation that medical allowance or conveyance allowances are to be included as components of the salary structure?
You can include N number in part B. As far as part B is exceeding 50% of then to that extent which is exceeded, no, that will be transferred to part A as a wages. So any allowances you can have, but this is a structure. The conditional clause is this: if it exceeds the part B, the exclusion part, that if it exceeds 50%, to that extent it will add up to your wages. That's a thing. So you can have it.
All right.
Allowances in the exclusion part, not in the inclusion part.
Got it. Okay. Thank you, sir. And ma'am, next question is from one of our attendees. It is around whether the PF contribution is taxable. So the question goes this way. Regarding PF contribution, which is higher than 2.5 lakhs, is taxable. So is it only for respective year contribution or a cumulative contribution?
It is for the respective year. It's when it exceeds 2.5 lakhs in that financial year.
All right. So, Kiran, I hope that answers your question. And also, dear participants, there are a few requests, a few questions that you have put up asking us whether you'll be getting the recording, the presentation, anything as such. Yes, for sure. We have been recording this session. Definitely, you will receive it. And also, we do understand we are running short of time and we have already extended the session by 7 to 8 minutes. So we are trying our best to take up your questions. But if any of your questions go unanswered, please don't be disappointed. You can always write back to us. All right. So in the meantime, I'll just take up a few more questions. There's one question from our attendees around minimum wages again. So in case 50% remuneration is less, the minimum wages, then what would be the scenario?
There is
So
yeah. Please. Yeah, go ahead.
So what I was just mentioning was that the minimum wage is something that will be prescribed by the government. There will be a national floor wage, which will be provided by them, and then the states will have to come out with their own minimum wages. So once that is done, once national floor wage limit is set, the states also notify the minimum wage. That minimum wage is something that the organization has to pay to the respective employees. Those employees can be semi-skilled or highly skilled or skilled workers, depending upon whatever is notified by them. So, and minimum wage means the definition of the wage itself. So at any point of time, whatever is the wage as per the definition of wage, it cannot be less than the minimum wage, which is prescribed by the government. So over to you, Ramesh sir.
Absolutely, yeah. You said it.
Yeah, thank you, sir. So Ramesh, sir, next question is for you. Since you already touched upon the retaining allowances, so one of our attendees, Mr. Akhil, would like to know what are the components that fall under these retaining allowances?
Nothing. There is only one component, that is retaining allowances, where you pay to an employee in a seasonal industry to retain the talent. See, that's what I said. In a crackers industry where crackers are being manufactured, that's a seasonal industry, right? So what happens? 6 months you will have job, 6 months you will not have job. So to retain talent for that 6 months when the industry is not working, then there is a certain amount of allowances paid to that particular employee, that is called retaining allowance. So no other allowances or component will be added to this retaining allowances.
Sure. Thank you, sir. And I hope that answers the question. And next question is from Mr. Hemant. So, ma'am, I think you can take up this question. So here Hemant's question is, if the restructuring leads to reduction in gross or net salary, whether it is allowed as per labor laws?
Didn't get the question.
The question is, if this restructuring leads to the reduction of gross or net salary, is it allowed as per our labor laws?
As long as it falls within all the other requirements of minimum wages, there is no problem. You can always reduce the salary.
All right. Yeah. Thank you so much, ma'am. So I hope Hemant has got the answer now. And dear attendees, we'll just take up a couple of more questions and then wind up for today. So Ramesh, sir, next question is for you. It is around leave encashment. So with respect to this, is it mandatory to have the leave encashment during the year end, or company has the right to make the decision like leave encashment can be done only at the time of separation and lapse during the service of an employee?
In both ways, but in this new code, the employees, they have been given an entitlement of claiming it. If employee claims it, ultimately you'll have to pay it. But if employee says no, it's good at the time of separation, fine, that can be done.
All right. Yeah. Thank you so much. So I hope that answers the question. And there are a couple of more questions coming up. So just a minute, sir. I'll just take it up. I'm just trying to filter if there are any repeated questions.
In the meantime, there's one question on AS 15, I think, whether it's mandatory for everyone.
Yes, ma'am.
See, as per the accounting standards which are issued by ICAI, all businesses are divided into 3 categories, 1, 2, 3. If it is a measurement standard, it is applicable to all the categories of businesses. So AS 15 is one of the measurement standards. It's not a disclosure standard. So there's only flexibility with regard to disclosure standards for small and medium enterprises. Whereas AS 15 is a measurement standard, and hence it would be necessary to do an actuarial valuation under AS 15 if there are any past service component costs.
Sure. Thank you, ma'am. So I think that provides the clarity here. Dear participants, we are just taking one more question for the day. So I think Mr. Anurag can answer this question. So it's actually a general question again around new wage code. So the question is from Rajiv. The question goes this way. When will this new wage code be applicable, and is it compulsory to adopt it, or there is an option like new and old regime in case of income tax?
That's a good question. So the first question is a $1 billion question, that when it is coming to picture, the answer is we are not sure. The media is reporting that October could be the likelihood date, but since we are already somewhere in the mid of September, chances are that October might come and go. My guess would be, and if the government asked me, I would suggest next fiscal year, obviously. And in terms of whether this code is a choice or not, there's no choice around it. It's a legislation. If it is applicable to you, it is applicable to you. You have to abide by it. In fact, under the existing legislation, it was applicable only to scheduled employments. Now with that thing, each and every establishment will be covered under the code on wages, and Further, the limit of 24,000 has also been removed. So even the white collar workers will be applicable. So the organizations have to ensure the timely settlement of wages, have to ensure that all those conditions around advances and other stuff, overtime and all those things, they have to abide by those policies.
Sure. Yeah. Thank you so much, Anurag. So I think it's now time to wind up this session. So before we conclude, if any of your questions are unanswered, please don't be disappointed because you have various means to reach out to us. Especially there's our own community forum called greytHR. So this is basically a knowledge sharing platform where there are many peers just like you from the HR industry, and also we have expert panel wherein you can just put across your questions, anything related to HR and payroll industry, not just specific to a topic, but it could be anything within the industry. So our experts will definitely provide you the answers, and also you can get answers from your other peers based on how it is working on their organization. And here is the URL for that. So please do visit our page, and if you have any questions, do put it across. And if you have any questions specific to our speakers today, you can always write back to us on this given mail ID, that is sharmishta@greatofgreatip.com. All right. So please feel free to write back to us. And so as to conclude this session, what I would like to say here is just let's embrace this new change. So instead of worrying about when is it going to be applicable, or should I really implement it, or thinking of a number of other things, let's just be prepared for it and let's welcome it. Just with the hope that this could be a major breather for thousands of companies that have been hard put to set a new compensation structure for their employees. So on this note, I thank our experts today, Mr. Anurag Jain, Ms. Aparna Surabhi, and Mr. Ramesh Padmanabhan for providing us all these helpful, informative sessions and the pointers, and also helped us in gaining a lot of understanding on how this new code of wages work. All right. And also, I would like to thank our beloved attendees as well for attending the session and for making this session a huge successful. I hope this session has been informative and helpful to all of you, and we'll be looking forward to see you in our upcoming sessions. So till then, stay safe, take care, have a great time. Thank you.
Thank you, Rashmi. Thank you, Anurag.
Thank you, Rashmi. Thanks, everyone.
Thank you,
Thank you,
Aparna.
Rashmi, and thank you, Sharmisha. Yeah, nice interaction with you, Anurag and Ramesh.
Thank you. Thank you, ma'am.
Same here, ma'am. Thank you, ma'am.
Yeah.
Thank you so much. Bye.
Good night.
Thank you. Bye-bye.
Thank you everyone for joining.
Bye.